Welcome back. You're watching Indian Open. Let's just quickly look at what the Asian markets are doing at this point. SGX Nifty that is trading higher by about 0.5%. Nikkei 225 down about 0.5%. Shanghai and Hang Seng trading with marginal gains. Let's talk a little bit more about what's been happening. And crude oil prices have come off significantly. WTI crude plunged over 5% to fall below that $60 per barrel mark yesterday. The US-China trade spat has intensified. All the prices have recovered this morning. Further moves against Huawei may deepen the crisis. Let's get in a check with David Lennox of Fat Profits, who's joining us on the phone line right now. David, thanks very much for taking out the time. Big moves coming about in crude, getting extremely volatile. Now at $68 per barrel for Brent. What is the future outlook for crude oil?
Well, look, certainly if you have a look at the events that have happened overnight, the market has suddenly got somewhat concerned about the growth of oil demand through 2019. And that is on the back of the fact that we have seen the escalation or lack of, settlement of the trade wars between the US and China. And that really is starting to now concern traders as we see this whole geopolitical event drag out now.
What do you think is going to be the major driver in terms of whether we see crude oil cool off further from here, or you see a comeback of crude and some amount of bigger moves on the upside? We're talking about demand and supply equation. Now we're talking about whether or not the global slowdown will reduce the intake of fuel by most of the bigger economies and therefore put pressure on demand.
Look, certainly it probably is supply that continues to be the real driver of the oil price. That's primarily because we've been able to track what's been happening with supplies now for many, many years, and it's become quite a fine art. When it comes to demand, those numbers are much more nebular, and unfortunately we don't actually know them until some time after the time has passed. So markets will really continue to watch what's happening on the supply side. And as we're all aware, supply, certainly out of OPEC in 2019, is falling. It's come down from 30.5 million barrels to now just over 30 million barrels. So that's a significant withdrawal. And of course, we have seen in the US no significant uplift in uplift in supply from their shale oil fields. So again, that's really putting pressure on supply. So we do believe that it's going to be supply, but every now and then we do see markets get concerned about demand. It's very infrequent, but now is one of those times because of the other events that are happening that brings that particular feature to the front.
So what, according to you, is the near-term outlook on the price of crude over the next coming months?
Certainly for Brent, we haven't really shifted away right throughout the period. Our end-of-year price at between $74 and $84 a barrel. So we do think that if that's the case, then there is probably, we believe, a little more upside, but we certainly do think that any real rallies have been constrained because the markets do have this concern over where growth is growing. And of course, they're always concerned that OPEC will continue to comply and reduce their production rather than perhaps start to increase it, as we've seen in the past.
All right. David, we'll leave it at that. Thank you so very much for joining us for that quick update. Crude oil prices now coming off pretty sharply, and that's probably good news for us. So we had two sets of news that was positive in yesterday's session, at least. Nonetheless, the markets corrected heavily towards the end of the trading session. Interestingly, it's broken the past history of the last four elections.
Yeah, that it has. But the interesting bit also would be, Devina, that if indeed crude has done what it has done and the sentiment around the macro stability is there, what happens to the currency? Yesterday started off very strong, then weakened during the close sub 70. Let's wait and watch what happens during the course of the day today as well. With crude coming off, you probably expect the rupee to do well too. Before we get in our fundamental experts on the board, let's get in Agam Vakil, who's standing by with the derivative setup on the day as well. Agam, good morning. It was an interesting day of trade, very volatile. VIX came off, but it is also the options expiry. Sum up for us How did the day end? What are the cues that one can take forward?
Right. So it was largely on expected lines, the way things played out, considering we did see the indices come off to a certain extent, where we did see a lot of investors and traders take profits off the table, and which is why we saw the Nifty come off by around 0.7%, unwinding coming through in the open interest, which indicates that there was some profit taking coming through. And as far as the Nifty banking futures go, it was a little bit of a reversal, because we've actually seen an increase of open interest here. And even though the Nifty bank came off by as much as 0.4%, may not necessarily be interpreted as selling coming on. It's going to be, well, a tough one to call when it comes to the movement of the markets today, because the big event is out of the way, and from here on the focus will be back on fundamentals and what a lot of analysts think about that. That said, the India VIX has come off by as much as 30%, again very much on expected lines. As soon as the verdict was out, we were expecting the IVs to crash, and significant writing around the 12,000 mark, the 12,000 call to be precise. So there you have it. Let's move on and talk about your other variables, such as Nifty put-call ratio at a very neutral level of 1. And when it comes to your stocks, we're watching out for Adani Power and IDBI Bank, which is in the F&O ban, but Reliance Capital moves out. Of course, it will also have some implication when it comes to its deal with Nippon. And of course, Bank of Baroda, Ujjivan Financial Services, and Hexaware, among others, which will be in focus. Besides that, in terms of unwinding, Sun TV should be at the front, considering, well, below estimate earnings, and Cipla, Reliance Capital, among others, which should also be in focus. But it may very well be a choppy day, at least in the start. But, well, the overhang's out of the way. So that should also further ease the India Volatility Index today.
All right. Thanks a lot for that, Agam. That is a quick update on the F&O setup. Sudip Bandhopadhyay, Group Chairman at Inditrade Capital, is joining us on the show this morning. Sudip, great to have you.
Thank you.
The big day, post the big day, last day of the week. But, keeping the short-term gyrations aside, what would the forward-looking outlook be?
Well, I think the government has quite a lot of to-do stuff which they need to quickly get into doing. You can look at multiple estimates of what the economy is doing, but the fact remains that it needs to do much, much better. And if that's the case, then the government has its task cut out. There is a liquidity shortage, I won't use the word crisis, definitely in the market. And forget the NBFCs and banks, it's actually hurting the economy. That needs to be kind of handled immediately. PSU banking is another space which requires very, very urgent attention. The government has been trying to consolidate the smaller banks with the larger banks. They have been trying to capitalize to an extent. But what feeling we get is that whole lot needs to be done. It's not enough. 70% plus of the deposits still go to the PSU banks. Under the circumstances, PSU banks need to be very, very active lender in the market, which they are not for considerable period of time. So these things needs to be definitely corrected for the market to really move up, and whole lot of sectors of the economy to start functioning properly. Whether you look at auto, whether you look at FMCG, whether you look at durables, I think economy needs to be kicking. Of course, in addition to that, there is capital investment which needs to come in the economy. There needs to be infrastructure which needs to be really built. We did quite good as far as road construction is concerned, but I'm not sure about the other sectors of the economy, including kind of handling the power sector. The government has put in significant efforts, but I'm not sure whether what they wanted to achieve has been achieved. There's a long way to go before we are out of the woods as far as power sector is concerned. So considering all this, I think the government has its task cut out. We will expect strong action. Budget coming in July will be the first scope for the government to really take some good calls. I won't say hard calls, good calls as far as the economy is concerned. We'll have to wait and watch. We'll start talking about the markets. We'll start talking about the fundamentals from now on. I think the binary event is out of the way. We'll all focus on the markets and move forward.
Okay. What the government does, Sudip, is one thing. What is happening is the other thing. What has happened yesterday is, amongst other things,
absolutely,
crude prices have come off and come off quite rapidly. You look at commodities very closely, which is what I'm asking you. I know it's difficult to preempt what crude will do, but with whatever view you have on crude, what happens to the crude sensitive pocket, and not just necessarily the OMCs because they are the usual suspect, but there's a larger economic impact and input impact for a lot of other pockets as well.
I completely agree with you, Neeraj, but unfortunately, I'm not very, very comfortable on what's happening as far as the crude is concerned. Yes, it came down yesterday, and we all know crude coming down is good for Indian economy, Indian markets, everything. The reality is, Middle East and the entire region is not very a stable position. There are a whole lot of issues and whole lot of pulls and pressures between Iran and US. God forbid if there is a flare up there, I think it will be disaster for the crude as well as economies like India, which are crude oil import dependent. So we have to carefully watch. It's not 2014 then where we can expect crude to continuously come down and give us that kind of fiscal comfort. I think we are some distance away from that. It's got nothing to do with India. It's got to do with geopolitics, predominantly in the Gulf.
All right, Sudip, lots more to talk to you about individual stocks as well. But in the meantime, let's just go across to our research team. They're joining in right now to talk through the stocks in news. And we've got two other numbers coming about Grasim and JSW Steel. So Nikki joins in with JSW Steel. Darshan, let's start off with you first on some stocks in news.
Yeah, so yesterday was election heavy, but we did have some numbers that came out. Sun TV disappointed as far as their numbers were concerned. If you're looking at the top line, that was aided by, the IPL part of IPL revenues came in and movie revenues that was there. But profit missed estimates due to higher movie amortization this time around. The TRAI new norms are out and they hit the TV business for the company, and that is something that impacted the financial. The management on its part is optimistic on the digitization upside. E-Clerks also revenues were up 1%, EBITDA was down 1%, net profit was down 8%. Profit was hit because other income was down almost 40%. The outlook remains slightly cloudy because they are transitioning at this stage, and CLSA believes that the margins have rebounded but will remain volatile till the time the on-site reaches full scale. Novartis revenues down 12%, net profit down 26% on low other income this time around. EBITDA was at 20 crores versus a loss on the back of a loss last year, and the EBITDA was positive on the back of cost controls that came in. Healthcare Global revenues up 17%, EBITDA up 3%, so operationally decent, but there was a net loss of 8 crores because of the below the line items. Eros revenues down 6%, profit was up 14%, EBITDA was down 31%, and the reason profit was up because other income was up 2 times this time. In terms of other news, Reliance Capital plans to sell 8.7% stake in Reliance Nippon, and they will get 1,155 crores, and it's really done by an OFS over 2 days. Zuari Agro, ICRA has downgraded the short-term as well as long-term funds worth 4,200 crores to default rating. And finally, Radico Khaitan, the Pollution Control Board revokes the closure of the UP plant, which probably will be slightly positive for the company.
All right, Darshan, thanks very much for that. JSW Steel, Nikki, what are we factoring in?
While steel prices have been lower year-on-year basis, and the coking coal prices, which is the input to steel, that have been higher. So obviously we are looking at a downtick coming in on the operational performance of JSW Steel, just in line with what we saw across the board for the steel industry, be it in terms of Tata Steel, JSPL. But basic numbers first, where revenue is seen up by as much as 3%, that's a flattish growth that we're looking at on top line. Bottom line, we expected to see a decline of around 50%, and in terms of operational performance, that is expected to dip by as much as 19% year-on-year basis on consolidated level for the company, and the margins are expected to shrink to 20% as compared to 25%. Importantly, what we like to watch out on standalone basis for JSW Steel will be the sales volume growth, which is expected to decline by as much as 3% to a number of around 4.2 million ton as compared to what we saw in terms of the corresponding quarter. And EBITDA per ton, now that's a key metric out here. That number is expected to be a little over 9,500 per ton as compared to 12,000 per ton that we saw in the corresponding quarter. If we talk about the overseas subsidiaries, they are also expected to decline in terms of the operational performance. JSW Coated is seen lower by as much as 64%, the EBITDA performance. US Mills EBITDA is too seen declining by as much as 48%. Overall, apart from these earnings, what we'll really like to watch out will be the commentary coming in on the steel prices and also the overseas subsidiaries.
All right, thanks very much, guys, for that. So lots of those stocks to keep an eye out on. And Sudip, let me just come to you with a pocket. I think Grasim also reports its numbers today. So that's one pocket that is clearly outperformed in terms of the overall industry-wide growth this quarter. Do you think that this is probably the start of something big for the cement space? They've been starting to take price hikes as well.
Absolutely. In fact, I've been bullish on cement for quite some time and was getting a little frustrated as to why they were not able to take the price hikes, in spite of the fact that the volumes were going up. But I think now we have seen the price hikes coming in, and very clearly the way the demand-supply scenario is panning out, I think next couple of years should be good for the cement industry. The capacities take some time to come up, and based on the existing capacity and the demand scenario, the way it's unfolding, and hopefully the way the government will push infrastructure, we believe that cement will have a significant upside in the next couple of years. Let's focus on companies which are operating in northern and let's say central India, and I think they will have a very good run. And also I must tell you that the way things are, looks like that the price hikes which they have taken or are taking are there to stay. It's not that it will fizzle out in a short span of time. So I think it's good time for cement companies. This quarter results, that is April, June, should be good. I'm not sure about the next quarter. Normally it's a soft quarter because of the monsoons and things like that. But if you are planning to be in the stock for at least 1 year, I think it's a great place to go at this stage.
Okay, so what would you look to do, Sudip? Yesterday on Ask PQ, by the way, somebody asked this query and you mentioned a couple of stocks I've forgotten. But would you veer towards the large cap names, or would you believe that the mid-size names can give a better bang for the buck?
You're absolutely right, Neeraj. In fact, the entire cement space looks good. But if you have to have a better bang for the buck, I think I would go to the mid-cap space. These are also large companies. They're not really small companies, but I think that's a better space to be in. Let's look at a company like Birla Corp. I think post-acquisition of Reliance Cement, their capacity in the central and northern India has significantly gone up. They have a whole lot of benefits coming out of that acquisition, and the way they are positioned, the price hikes possibility of in future as well. I think it's a good buy at current levels. I will also look at a Heidelberg Cement, fantastic company. They've done all the right things over the last couple of years. It's excellent buy at current stage.
Trading at highs though.
Yeah,
trading at high highs.
But if you still look at it, Neeraj, I think the way the things are panning now, the way the prices are like to move, and the way the hinterland where they service, cement is all about logistics. And if you have that, the cement capacity in the right place, I think you are in for a good time.
Well, that's an experienced voice in cement. All through the years, I remember whenever Sudip has spoken about cement upcycle, some of those stocks have done really well in the past. I remember a conversation with JK Cement
That's
or
right,
JK Cement
Lakshmi.
sometime back, and a couple of others too. So, well, watch out for some of these mid-sized cement names. Could be interesting. Sudip, stay on. So much more to talk about. It's about the time that the show that we get some technical opinion going as well. Let's start off with Aditya Agarwal. He's head of technical research at Way to Wealth Securities. Joins us right on the show. Aditya, good having you. Thanks much for joining in. What's your sense today? Yesterday was a bit volatile. Today, the SGX Nifty indicates a start which might be marginally in the green. What's the trade that you are advocating?
Good morning. Well, if we see overall trend for the market is looking bullish. Yes, in last 1 week, we have seen a lot of volatility because of the. But now we will see some rationalization of the market. We will see that market will again trade in a range. Now we will not see that kind of large swing which we have seen in the last couple of days. So overall markets are looking bullish. If there is any 30-40 points dip in Nifty in today's session, then it can be used to initiate long positions. If we see then in Monday's session, if there was a gap up opening, so I think Nifty can test those gap up levels, and around from those levels again a pullback can be there. So that the gap comes somewhere in the range of 11,600, 620 level. So around those levels, one can use those dips to initiate long positions with a stop loss of 11,540. On higher side, now 11,800, 880 will be the target. I don't think so. Nifty is going to test 12,000 in a very short term. That will be act as a very strong resistance level. Aggressive callbacking is there. So broadly, I'm expecting that markets will trade in the range of 11,600 to 12,000 levels, but with a bit of positive biasness, where any kind of dip can be used to initiate long positions.
Okay, Sameet, Chavan is with us as well. Sameet, what's your sense? What's your trading position that you are advocating in today's session?
See, yesterday we saw a good move towards 12,000 in the initial hour, but while Nifty was surpassing the 12,000 mark, we did see massive writing in 12,000 call options in yesterday's expiry as well as in monthly expiry. Earlier also there was huge built up in 12,000 call option, and yesterday while Nifty surpassing those levels, we did not see any unwinding. In fact, we saw a huge amount of addition, so that clearly suggested that we are likely to see some kind of volatile move or profit taking. We were expecting a profit taking toward 11,800, but it went below that also significantly, which was clearly on an unexpected line. But we still believe that market has corrected a bit, it has cooled off a bit. 11,600s, 550 is likely to act as a very strong support, and we would use those dips to go long. Now, in our sense, the focus would shift on individual stocks. The way mid-cap index is shaped up, we believe that this time-wise and price-wise correction is toward the fag on end of this phase for this particular index. So we are likely to see a good buying interest in most of these beaten down mid-cap counters who are trading around their multi-year, multi-month support levels. But as far as index is concerned, we still remain bullish, and for the day or next couple of days, we expect 11,850 to be retested, and quite soon, probably in next couple of weeks time, we would expect that 12,000 to be achieved on a sustainable basis.
All right, we'll come back and discuss those stock ideas with both our technical experts, but on to our special segment, Bloomberg Edge, where Yash Upadhyay tells us about a pattern that the Bloomberg terminal has thrown up on a particular stock. Yash, what's the stock today?
Morning, Devina. So we're tracking Aegis Logistics on the charts, and the trender indicator that has given a positive signal for the counter. Remember, we had a big negative day for the markets yesterday, and after opening and going higher, we saw a big big amount of short selling coming in, and the stocks, most of them ended lower. But Aegis Logistics was one name which managed to close higher and ended more than 2% in the green yesterday, with volumes 2 being supportive, and the trender indicator that has suggested a positive signal for the counter. Like we always do, let's first try and understand what the trender indicator is and how do you interpret it. It basically it's a proprietary Bloomberg indicator and basically uses the average true range for the purpose of calculation. How do you interpret? You go long when the trender line flips its color from red to green, and you go short when the trender line goes from green to red. But in the case of Aegis Logistics, we've seen that the trender line has in fact gone from red to green. And now the red line over here, that is at the mark of 207. The condition for the trender line to flip its color is that the stock should manage to close above that mark, and we saw in yesterday's day of trade that the stock has managed to close at 210 with decent volumes 2 coming in, and that has changed the trender color from red to green. And historically, every time that this has managed to happen, we have seen a big rally in the stock. But that's not all. We are also taking a look at the longer term time frame, and on the weekly charts, there's a lot of things that you need to take a look out for. The green line over here, that is the strong support for Aegis Logistics. It's at the mark of 170, right from the June of 2017, where it took support at that level and went up all the way to 300, to again in the month of September 2018, and yet again somewhere near the start of March. It has come down to these levels and has seen a bounce. This time around too, it has come down to these levels and has taken a bounce and is now trading at 210. 300 is a high resistance mark for the counter, and if you take a retracement, a 61.8% retracement of this high to this low, that comes up to almost 250. So from here, the stock could run up as much as 19 to 20% to 250. The RSI in the lower panel, that is also positive. So if we could zoom that, you'll see that the RSI 2 on the weekly time frame is making higher highs and higher lows on the charts. So that is the key positive for the stock to watch out for.
All right, and how well has this worked in the past, Yash?
So particularly for the trender indicator, Devina, 3 out of the last 4 times that this has managed to happen, on a 1-month basis, the stock has managed to run up close to 5%.
Okay, thanks a lot for that, Yash. Let's quickly get in some stock ideas as well then from our technical experts. Aditya, why don't you start off with what are the stocks that you're recommending this morning?
Well, my first recommendation will be buy on Reliance. If we see Reliance, and last week's stock saw some sharp cut, but the stock has already seen a good recovery. But overall structure is looking positive. 1330 is a very strong support zone. So I think yesterday's dip can be used to initiate long positions at current levels, or any decline it can be bought. with a target of 1385 and stop loss of 1310. Coal India is another counter which is looking quite positive. In last 2-3 days, we have seen a good recovery. Stock has already given a takeout above a short-term resistance of 242 levels, and it has closed above that in yesterday's session. So from these levels, I'm expecting that stock can see some decent recovery. On the higher side, it can test 257 levels with a stop loss of 240. Coal India can be bought at current levels. And my final call will be in Maruti. If we see a whole auto pack, then that has underperformed for the last couple of weeks. And if we see Maruti especially, then the stock has been trading in the range of 6,400 to 7,800 levels for now a couple of months. Now 6,400 is a very strong support. From those levels. We have seen a good pullback in the counter. And if we see a structure for the counter, it is looking short-term positive. At current levels, it can be bought with a stop loss of 68.10. On higher side, I'm expecting the stock can test 7,200 levels in next few days.
Okay. Sameet, Chavan, what about your strategies?
See, I have a couple of mid caps on the long side. Those were, clearly bucking the trend yesterday. First one was DLF. If we look at the overall structure, 180 has been acting as a very strong resistance of late. And yesterday we saw a decisive move beyond that. And if we look at the overall volumes in cash segment, it has risen twice of its average daily volume. So that suggests that the positivity is likely to continue. In future segment also, we clearly saw, a good short covering move in this counter. So we expect a continuation of this upward rally in this particular counter. Target would be around 191. It can be bought with a stop loss of 174. The other stock would be Engineers India. We saw good traction in most of the PSU stocks yesterday. Engineers India is the one stock that was clearly, defending its important resistance level of 116, 115 since last few days. And yesterday we saw an attempt to surpass those levels. Yes, it has closed around those levels, but the kind of structure we have, we expect the stock to surpass 116, 118 on a closing basis as well. Thus, one can go long in Engineers India. Target would be around 124, and stop loss can be placed around 112.
Okay. So that's some ideas. Keep them on the back of your mind. Sudip, some frequent movers in the last few days. One of them is IndianOpen Bank. Quite remarkable. At least in the eyes of the brokerage as well, what they have done in the quarter. That's led to 2 days of good performance. Bharat Financial, as a result, has also started moving up. What did you make of these numbers? Because, IndianOpen is wedged right between there. It's not quite in the valuation category of HDFC Kotak, and it's not as low as what a Yes Now is or some of the other corporate-facing banks are right now.
I think it was a little unfortunate. Look, with IndianOpen, normally they are the first bank, first company to announce results every quarter. If you see, this year that didn't happen. They pushed back their results, and all kind of rumors started floating in the market regarding their asset quality. Yeah. Of course, the market knew about their ILFS exposure and things like that, but then every other name which had a problem was linked with their exposure in the sense exposure in them, things like that. So it became really messy as far as market rumors are concerned, and the stock took a real hard beating. Once the bank announced the results, Mr. Sopti came and clarified a whole lot of things, and he also put a cap saying that 1.9% of the book is the total exposure as far as all these names put together. I think once that happened, market was kind of reassured, and it was a clear turnaround for the stock. Look, if you ask me, I believe it's a fantastic bank. It's a great franchise which Mr. Sopti has built, and even today, if you ask me, I can go and buy the stock, and I look at 1700, 1750 levels in maybe 6 months' time. The only point I'll make here is the sword hanging over Mr. Sopti's extension. RBI has to take a call on that. It's a larger call. If that doesn't happen, I think then the stock will again be beaten down. Because you fear that somebody else might come and do kitchen sinking, or do you fear that Sopti is just such a great CEO that it will be difficult shoes to fill? I think more of the second. I don't have a fear of major kitchen sinking happening in IndianOpen Bank. We believe that it's pretty clean. We haven't heard of too much of kind of murmur from RBI as well. Completely. So I would believe the second one, which is Mr. Sopti is such a figure that we will probably get a good CEO after him as well. But the market sentiment will definitely get impacted if he doesn't give an extension, provided, the fact is he has already mentioned categorically in public that he is looking for an extension. He's happy to run it. So under the circumstances, if it doesn't get it, I think it's a little setback for the bank as a whole.
Okay, so that's as far as IndusInd and Bharat Financial go. Keep those stocks at the back of your mind. A very important set of numbers comes out today, to my mind, Sudip. Quick thoughts, Page Industries. And the reason I bring this one up amongst everything else is because, again, we'll give an indication of where is premium consumption looking to do in one particular category. Quick thoughts here.
I think the stock was beaten down post last results and what's been happening. Things which we completely missed out when the stock was going on its one-way up trajectory. We started talking about that single product, this, that, and all that. I think there are still some way to go before we can be very, very confident about Page Industries. The valuation even today is not cheap. So we'll have to wait and watch the results. But it's not that I will recommend jumping into Page Industries one way or the other. Even if the results is good, I will not recommend. If it's bad, definitely not.
Okay, if it's bad, definitely not. If it's bad and even if the stock corrects, definitely not. Sudip wants to be prudent, take a step back, look at things. If the results are bad, keep in mind there is no need or no rush for the stock to move up in the first place. So just please don't look at historical prices when you look at a stock currently and say that, oh, 36,000 wala has come down to 21,000, therefore it's a good buy. There might be reasons why the stock has done what it has done.
All right, we've got 30 seconds left to go for market pre-open. It's going to be an interesting open this morning. The SGX Nifty pointing towards the strongest start, at least 60 odd points higher for the SGX Nifty. The rest of Asia, more mixed bag. While you have Japan trading under, China and Hong Kong are trading with marginal gains of about 0.2 to 0.25% apiece. Interestingly, we'll see what happens to some of those defensives that got beaten down in yesterday's session, whether or not you see some money coming back into these pockets too. Nifty 50 opens up with gains of about 1%. And Sensex 0.25% higher this morning. The rupee as well, 69.75 is what you've got. So after that big taper towards the end of the session, along with the beating of the equity markets, when you saw that weakness coming back in today, some strength coming back into the currency, back around 69.74. Individual counters then on the Nifty 50, start looking at those as well. You've got Axis Bank, which has moved up closer to 1%. Bajaj Auto has moved up. Lot many more gainers than losers. SBI standing tall there. 4% higher for SBI. Eicher Motors now another 3.7%. IOC has moved up 3.25%. Eicher Motors now at 21,000. IndusInd Bank, that's 1635, going from strength to strength. ONGC, Asian Paints, M&M, BPCL, Sun Pharma, all of these stocks gaining some ground. And even some of those IT names, Tech Mahindra is doing okay for itself in today's session. Reliance Industries at 1349, and should look at an L&T. Remember, it's any which ways trading at its record high, so 1490 now for L&T.
Well, the currency and the bond yields, and just see if the crude pullback has helped the currency in the session today or no. 69.76, so yes, a bit of strengthening for the rupee. Let's wait and watch if this lasts. Yesterday it didn't, remember, and the bond yield should come up on your screen as well, just momentarily. 7.23, a deep intraday gash in the yields, currently at about 7.23, so just about 5 bips lower than what it was before the verdict came in yesterday. Anyways, the other rates will give them a chance to stabilize. Let's go across to Sameet Sarkar, who's joining in with the top brokerage calls and what brokerages mainly are making of the election outcome and their preferred stock ideas. Sameet.
Well, a lot of stocks that the brokerages have recommended post Modi has been re-elected as the Prime Minister of the country. Now, if you see CLS, they have given their top large cap picks, which include Axis Bank, ICICI Bank, IndusInd Bank, HDFC, Ultratech, Reliance Industries, Bharti Airtel, ONGC and NTPC. Now, among the mid caps, they have recommended Godrej Properties, Shobha, Ramco Cements, Lemon Tree, Havells India, Astral Poly, Sadbhav Infrastructure and Dr. Lal Pathlarth. However, this brokerage is underweight on IT stocks, staples, pharma stocks, metals and two-wheeler companies. Macquarie, they are recommending investors to shift from defensive and large cap stocks to high beta domestic sectors and mid cap stocks. Now they're positive on sectors like private banks, industrials and real estate sector, while they're negative on consumption and NBFC space. Now UBS, they are overweight on private banks, property, real estate stocks, oil and gas stocks, consumer discretionary and four-wheeler auto companies. Now their most preferred stocks include the likes of Asian Paints, Axis Bank, BPCL, Britannia Industries, Cipla, Federal Bank, Godrej Properties, ICICI Bank, Infosys, ITC, Maruti Suzuki, NTPC, Petronet LNG, Reliance Industries and SBI. Now for Nomura, their top picks are ICICI Bank, Axis Bank, L&T, Container Corp, SBI Life, and they have upgraded OMCs to overweight rating, and they continue to remain positive on the gas space. However, they have downgraded autos to neutral. So overall, if you see a lot of positive views coming in for the private banks and for oil and gas space, especially for ONGC and the oil marketing companies.
In fact, the oil and gas pack takes center stage today, and it will probably be so since the Brent crude oil prices have come off so significantly. Oil marketing companies, Sudip, this quarter really boosted sentiment. You've got good profits coming in there for all of the three names. What's the sense now? Is there more? Is there an investment opportunity here? Because up until now, this space was slightly underowned.
They're active today, by the way, because of the crude fall.
In fact, Neeraj, Devina, I have been avoiding these oil marketing companies till the elections, got over. We all know, even if crude prices shot up, the government wouldn't have, probably directly, indirectly allowed they to pass on the price increase. But the fact is now the elections are over, and I think the oil marketing companies, BPCL, HPCL in particular, definitely deserve attention. As you rightly said, they have been performing well. Good quality management amongst PSUs. If you talk about all PSUs, I think the best quality of management is in the oil companies, oil marketing companies in particular. So I have no hesitation. Also remember one fact that there is a demand and there is probably a need for GST extension as far as oil is concerned, and that's going to happen somewhere or the other, and the biggest beneficiary will be BPCL, HPCL. So I think if somebody is taking a slightly long-term call, I think it's definitely worth buying BPCL and HPCL. They can take their pick. Both are good.
Okay. IT, somewhat taking a back seat now?
I think we have to be a little careful on IT, I would say. Couple of things. One is, I said the oil is volatile and going to remain volatile. If currency shoots up, depreciates Indian currency, obviously we know IT benefits and blah, blah and all that. But the fact remains that the core growth as far as IT companies are concerned is nothing great. It's steady, stable as far as the large IT companies are concerned who have pivoted their business away from traditional business to digital and things like that. So you can expect a steady return from a TCS or Infosys, HCL Tech, but can you expect spectacular return? Can you expect a significant gain? I don't think so. If you want little defensive stocks or some defensive part in your portfolio, maybe you can go and buy IT. You can expect a steady, stable 15-20% return, not beyond that.
Okay, so maybe steady state 15-17% return, 10-15% return, okay, but otherwise, Sudip Bandhopadhyay doesn't quite advocate that pocket. Sudip, you know one more business almost inside out, telecom. Now, what's happening there? The easiest answer is what Jio will do, and maybe Jio could be the easier investment option if you believe the valuations. My question though is, at these current prices, would you go out and make an investment call in a Bharti? More importantly, in a Vodafone Idea?
Not really. Not really.
Neither of them?
Neither of them. Because, Neeraj, I believe that there are multiple other pockets which are emerging where probably you have a much safer way of making money. Number two, I also strongly believe that this sector hasn't yet stabilized. There are a whole lot of things still happening in this sector. There is a 5G auction which the government is talking about. One doesn't know how this will pan out. Also, the consolidation of the infrastructure businesses of all the telecom companies, including Jio, is in the offing. I'm not sure how everything will pan out, how much cash will flow back to these companies, how this infrastructure sharing eventually will work out. Will it benefit the telecom companies in some manner or other? So I think there is still a whole lot of uncertain things. Also, has Jio kind of completed his customer acquisition thrust? I don't think so. I think there is still more to come. So I'm not going to be in a rush to buy Bharti or even Idea Vodafone.
That's true, because everyone's sort of forecasting a turnaround in 2020. So if the visibility is post 1 year, why would you invest in it
Absolutely.
now?
Absolutely.
All right. Anything else, Sudip? Leave us with a few thoughts, few ideas.
I think I also like the specialty chemical space, Devina. I think, you have to look at what's happening between US and China. China has been the largest manufacturer of chemicals. They've been supplying to the whole world. Now with this trade war and very clearly US and Europe moving towards the fact that they want to put some kind of duty, some kind of restriction on Chinese imports, there is a golden opportunity for Indian specialty chemical manufacturers. So you take your pick. I think they are in for a good time, maybe next 2 years, maybe 5 years. So I think that's one space which hasn't been talked about too much, but I think it's time for that space, definitely.
Okay, Sudip, pleasure having you. Thank you so much for taking the time out and being with us today. Really appreciate your time.
Thank you.
All right, that's Sudip Bandhopadhyay with his thoughts. As the 8 minutes have settled down, let's just try and look at some stocks which have done well and some which haven't, and clearly the OMCs stand out. Sameet, Chavan, BP, HP, IOC, maybe they formed a part of your idea list as well, but all three have started off well. Is there a risk-reward favor at these prices?
Clearly, they have been doing well since last 3 to 4 weeks. We have seen steady move. However, overall, if you see, they have stuck in a range. Now, HPCL yesterday, we saw a decisive move beyond its resistance zone of 300. But again, with market correction, stock came off quite sharply and closed below that important mark. So today, any kind of follow-up move, and if the stock manages to sustain beyond 300, yes, then that would unfold a fresh leg of the rally. In that case, we could see HPCL heading towards 325 or even towards 330 over the next few weeks. So within this space, HPCL and BPCL would be our preferred bets. But risk to reward wise, if I have to pick any one from them, I would certainly go with HPCL.
Okay. Minutes away from market open, let's tell you all that you need to know to stay ahead in trade today. First up, Nippon Life and other financial investors plan to buy out Reliance Capital's stake in the mutual fund joint venture. The stake is valued at around 6,000 crore rupees. HPCL, BPCL and Indian Oil will be in focus as US crude prices fall below the $60 per barrel mark. It's the worst fall since December.
Higher coking coal costs and lower realizations may hurt JSW Steel's Q4 earnings.
Sun TV posts steady 24% growth in revenue, but profitability falls below expectations.
And lastly, Pollution Control Board revokes the closure order on Radico Khaitan's Uttar Pradesh plant, but the board has restricted the use of molasses plant to make country liquor.
Okay, let's get in prominent market voice. Saurabh Mukherjea of Marcellus Investment Managers joins us right now on the show. Saurabh, good having you. Thanks much for joining in. What's the base case assumption, Saurabh, now that the event is out of the way and it probably hints towards not much else but continuity? Is it back to basics, and are the basics looking a bit more vulnerable, or are you more sanguine about the prospects?
I think, Neeraj, I've always held the view that politics and the stock market in India really don't have that much to do with each other, especially if it's a familiar government whose policies are well known, well understood now. I think clearly the market appreciates the fact that the familiar set of politicians will be running the country. But I'm not so sure there's any great reason to believe that the stock market will now fly through the roof, or it'll have a massive correction or any such thing. The standard challenges that we've been grappling with as a country over the last few years will continue. The financial system is in fragile shape. Jobs are a challenge. Fiscal deficit concerns are there almost as ever at the end of an election season in India. Those are challenges I'm sure the new government will deal with in the next 2 or 3 months. And in the meantime, we grapple with the fact that after 6 years of single-digit EPS growth, we have the Indian markets trading at stretched PE valuations. So fairly familiar construct, nothing particularly unusual about the situation for us in India. So whilst yesterday's or today's political events are breathtaking for the decisiveness of the NDA's victory, I think in the market we would do well just to keep our heads down and focus on business as usual.
All right. While we've already somewhat recovered and most probably have met year-end targets by the mid of the year itself, still we have a lot of ground to cover within the broader market space. And that's what everybody has been talking about so far. And probably it's rightfully so, because that's where you could see the next leg of big wealth creation.
So yes and no. I think the challenge in our country has become the Nifty. If you see the majority of the Nifty companies, they simply haven't shown any great sign of verve or vigor in the last decade. It's not just the question of the last 5 years. The bulk of the Nifty companies have struggled to deliver healthy return on capital employed over 10 years now. I would say 35 out of the 50 Nifty companies haven't clocked 15% ROC even once in the last 10 years. I think that tells you the story of why the broader stock market is not a particularly pretty place to invest in our country. As a result, index level returns in India are, I think, something like 12-13% over a decade, 8% over the past 5 years. And therefore, India has become almost by definition, regardless of which year you focus on, a question of stock picking, buying well-run, high-quality, clean, well-managed companies. And if you stick to that mantra, you really don't have to focus that much on what is the RBI doing, what is New Delhi doing, and so on. Stick to investing in what I call in my book coffee can investing, coffee can stocks, or what we call in Marcellus consistent compounders. Straightforward mantra of finding companies like, say, an HDFC Bank or a Kotak Bank or a Nestle or an Asian Paints. And what the Indian market has shown over long periods of time now is these sorts of companies give you healthy, steady returns with low volatility.
All right. Saurabh, we'll come back to you as soon as market opens. But quick top calls, 10-second answers. Sameet Chauhan, what's your top call for the day?
See, I'll go with Engineers India. My target remains at 124. Go along with a stop loss of 112.
Okay. What about you, Aditya?
Well, my top pick will be Coal India. It's given a good breakout. I'm expecting it can test 257. If that will be a stop loss of 241, can buy at current levels.
Okay. Aditya, we'll leave it at that. Thanks so much for taking the time out and being with us. Sameet, just stay on post-market open. Just want a Nifty bank view because that index is doing remarkably well on the pre-open session. So we'll take that and then let you go. But 276 points seemingly for the Nifty bank on open. Let's wait and watch. You're almost looking like digesting not all of it, but some bit of the losses that we had from the highs in trade yesterday. But here's how we're starting off. Strong start, not a bad one. About 270 for the Nifty bank, 89 for the Nifty, and almost 300 for the Sensex. So good brisk start, slightly better than what the SGX was indicating, by the way. The mid caps and small caps, I reckon, would not be doing too poorly either. About 0.5% for the mid cap space, a third for the small cap space. So the start is decent. Let's bring up the heat map and see what's moving, what's not. All marketing companies right up there, and no surprise. Though I must say a bit lower than what the pre-open rates were suggesting. So about 2.5% for BP and IOC. Yes Bank about 1.5%. HDFC Bank a third, 1.5%. So this one trying to recoup some of the losses that it had yesterday. Similarly, stocks like Hero MotoCorp, Indiabulls Housing and some other rate sensitives are doing okay. A lot of green, very little red. TCS, the sole source spot. And it's very interesting what's happening in IT right now. The last few days, they've just been completely off the buying shelves. But largely, it's all marketing companies on open. Just a couple of pockets that I want to highlight within the broader end of the spectrum. Firstly, companies that I believe should be in focus. We spoke about IndusInd Bank. Bharat Financial is the other one. And both of these should be kept in mind. Third day of gains. They were gaining in Wednesday's session post IndusInd's results. They did very well yesterday, and they are up in the session today as well. So do watch out for both of these names. One result that I wanted to highlight was Sun TV. Thought its numbers were weakish, but about 1.5% higher. Devina, what are you spotting?
All right, so a few other stocks. Firstly, just to pull up an RNAM now that we're talking about them putting up shares for an offer for sale. 218 is the price at which they're doing that. That's at a discount to the current market price of 227. It's down about 3% odd. Aside from a Sun TV that reported numbers, you had Eclerx that reported profits dipping 8% in the session. Should pull up that stock to see how it's done. There's Novartis India too that reported its numbers. Eclerx is up 4%. So even though profits came in slightly lower, there was the other income component which fell by about 9.6 odd. crores. Eros International, that's one stock to keep an eye out on. EBITDA was down 31.5 odd percent, 5% higher. Profits, though, however, jumped about 15% on a lower EBITDA. You've got the other stocks as well to watch out for. A few of the names that will report their numbers in today's session. Ahead of that, a few of the sugar names. So you've got a Mavana Sugar that will report its numbers today. You've got a Bata, what to watch out for, an REC, Page Industries, and Dish TV. This is going to be an important watch because Dish TV has been roiled with issues in terms of what's been happening, whether or not there's a deal happening here, not happening. So a lot of uncertainty around this counter along with the entertainment. The stock ahead of its numbers is marginally higher. Other stocks then, you've got the likes of Aditya Buildcon, which continues to move up 3.5%. India Cements is up about 3.5%. Interglobe Aviation 3% higher, and Jet Airways, which had recently moved from levels of 125, had gone right up until 165, is now back down by about 6.5%. That's down to 145 now. That's what you've got in terms of your market opening. It's still a positive open for the broader market space. 907 stocks are advancing versus 204 stocks that have declined.
Just one quick question with Sameet Chavan on the Nifty Bank, because that started off very well before we thank him. Sameet, 363 points higher for the Nifty Bank. What does one do now?
See, that it would be very difficult to trade Bank Nifty now, because if you see the overall range has widened significantly, and hence it would be very difficult. But still, since we have a view that soon we would expect the Nifty heading toward 12,000. So if that has to happen, definitely Bank Nifty has to contribute heavily. So we expect upward trajectory to continue for Bank Nifty as well. So next levels to watch out for would be somewhere around 31,200 to 31,500. And on the low side, 30,500 to 30,200 would act as a very strong support zone.
All right, Sameet, we'll let you go on that note. Thank you so very much for joining us this morning. Saurabh, just come to you on some of these larger private names, private sector banks reporting numbers, and the overhang ahead of results. And I'm referring to IndusInd Bank, but you don't necessarily have to talk about an individual counter. You can talk about the space as a whole. But the fact that they've spoken openly about their exposure to some of those troubled accounts, that's really cleared minds of investors, and it looks like it's going to be a smooth ride here on.
I think, look, let me not delve into any one bank's results. I think what's going to happen in the next couple of years in Indian banking, I reckon, is you've got 4 large private sector banks with strong CASA, upwards of 40%, in some cases upwards of 50%, which is quite incredible actually, and super tier 1, strong tier 1 ratios, great CASA. And I think these 4 large private sector banks, I think, will make lots of money in the next couple of years as the PSU banks continue their struggles with inadequate tier 1, and as the NBFC sector continues its struggles to find affordable money from the money market, where rates, I think, will continue inching up. Even though the RBI will cut rates, I think the money market will see money getting costlier for NBFCs and HFCs. So confluence of factors, and I think these 4 private sector banks will continue to have a great run for a couple of years as the market share in lending gets concentrated in their hands. So it's relatively simple investment strategy, I reckon, in private sector banks. Buy either all 4 or buy 3 out of 4. In some of our portfolios, we've bought 3 out of 4, and make money as the entire sector basically falls into the hands of 4 well-managed private sector banks. Really, nothing, very little else to say beyond that.
You briefly mentioned PSU banks, and that's a pocket of complete underperformance. Valuations, price to book multiples, very attractive, yet no takers.
I'll give you Saurabh's answer, by the way. Saurabh, if I can, I'll give your answer for you. You will say it doesn't fit the coffee can portfolio, the good and clean portfolio. Am I right?
But, if you're expecting consolidation.
Yeah, so I've really always been perplexed why people buy these stocks. It's one of those eternal, I mean, obviously, I'm always fascinated by this phenomenon in India where investors take their hard-earned money and invest in public sector stocks. It's not new, it's been there for a while, but I find it very touching that people who are working hard in the private sector to earn money, whether through their business or through salaries, then take the hard-earned money and buy scrips of public sector companies. It's always fascinated me. But to each their own. I can't get myself to put my money or our clients' money in PSU banks, but I'm sure there are other wise people who think it's a good idea.
So why not SBI? I mean, that's one institution that defines India's banking system. I mean, you've got that being the crux of the Indian banking system at this point. And that's not doing all that badly. I mean, obviously, you've had issues with several accounts, but measures are being taken. And even for the PSU banking space, the trajectory of the roadmap ahead when you're talking about consolidation, mergers within the banking space, smaller banks being absorbed by the larger banks, isn't that the step in the right direction?
So I think, look, a basic measure that I use is, for banks ROE, for other companies ROC, but for banks ROE. And say a 14-15% ROE, I think to my mind is a basic minimum hygiene criteria one should use before one invests in a bank. I think the last time SBI posted 15% ROE or even 14% ROE, I think I was in school. So that was a long time ago, as you can make out. So if a bank hasn't posted a 15% ROE or a 14% ROE during my professional life, it's a little difficult for me to persuade myself that my money or our clients' money should be invested in it. And one of the things we have to do is simplify our job, simplify the world through straightforward filters. And in the context of banking, I think ROE does the job. And unfortunately, said bank, high quality bank, national institution that it is, in many ways the fulcrum of India's financial system, I would say, is SBI. From a shareholder's perspective, I'm afraid the basic sanity check metrics don't get met.
Saurabh, yesterday in a chat with Manish Chokhani, I cited one piece that you had written, which was talking about how the larger portion of the consumption economy or the growth in the Indian economy, GDP, is being captured outside the index. And therefore, what are the investable areas within the index? Well, we didn't come up with too many which are providing a good bang for the buck, save for financials. And those two, the ones that you want to bet on, are very, very expensive. And therefore, my question to you, Saurabh, leave out the PSU banks. The mid-sized private sector banks, which are not as expensive, or the NBFCs, wherein the larger space is under a bit of a cloud, but there could be one or two which are better managed, don't have the ALM mismatches, and therefore might be better to invest in. Do such possibilities exist?
So let me tackle your second question first. So as I've been saying for the last year or so, in fact, the best part of the last 2 years, I've been worried about the HFCs and the NBFCs. I think the HFCs are in deeper trouble than the NBFCs. The NBFCs, because their loans are shorter dated, it's car loans, truck loans, consumer durable loans. The loans are shorter dated. I think their problems are less acute than the housing finance companies. Now, even within NBFCs, I think there's one straightforward way to think about which are the ones you should focus on and which are the ones you should run away from. NBFCs have a large corporate house backing them, a Bajaj, a Marugappa, or a Sundaram, a large, credible, high-quality corporate house with strong balance sheet behind NBFC, I think, is always a very useful thing to have, because that gives the money market a backstop when they're thinking about buying commercial paper issued by these NBFCs. Secondly, you look for short-dated assets. Look for NBFCs whose asset tenors are no more than, I would say, 2 years. Right? If you have short-dated assets as an NBFC, that's a good thing. You're not taking very long-term credit risk. And third thing, look for NBFCs whose liability tenor has been stretched out. So look for NBFCs whose typical liabilities are longer than a year, ideally 2 years, right? So the shorter the asset liability mismatch, so long dated assets, short dated liabilities, ALM is almost crunched out, that's ideal for an NBFC. And in that construct, Bajaj Finance meets that construct and has been part of our portfolio for some time now. If I had to look beyond Bajaj Finance, I would say the other NBFC which would pass the criteria, we don't have it in our portfolio, but would pass the criteria, would be Cholamandalam. The Murugappas provide stellar backing, short-dated asset portfolio, liabilities have been dragged up. I think a good NBFC. But my reckoning is the list isn't very long. The list of NBFCs where you should invest your hard-earned money and expect a good return over 3, 4, 5 years, I think is pretty short in our country, with BAF at the top and followed by Cholamandalam. Your other question was the smaller private sector banks. There are well-run small private sector banks. So there are times when DCB makes it to our portfolio. In my previous avatar, we used to have City Union Bank in our portfolio. These are good, small, well-run private sector banks. And they will have a good run, I reckon, over a couple of years. But the bulk of the consolidation opportunity that's coming together in lending, because of the gradual demise of the PSU banks, because of the problems of the non-bank sector, the consolidation opportunity in terms of market share falling into the hands of banks, I think that goes to the top 4 private sector banks with great CASA franchises and good tier 1. So if you want to benefit from that, 2-3 year shift where the market share in banking gets crunched into 4 hands, I would focus on the top of the market cap tree in private sector banking.
All right, Saurabh, it was a pleasure chatting with you. Thank you so very much for joining us this morning with your insights.
Thank you. Thanks, Thea.
All right, the markets are still holding strong, about 0.5% plus on the benchmark index, 11,727, but nowhere close to that record high of 12,000 that we touched yesterday.
Just before I take that break, Inox Leisure, it's up 8%, 350 rupees. It's the top gainer on the Nifty 500, followed closely, by the way, by HPCL, which is up 5.5%. So OMCs are doing very well, but HPCL in particular, quite a remarkable move in the session today. So do watch out for a couple of these names.
HPCL actually has had a real dream run.
After getting out of the Nifty.
After getting out of the Nifty.
True.
And compared to the other oil marketing companies also, this is really
done much better. That's true. Well, got beaten down a lot too. But anyways, more on this on the other side. In fact, very special voice on the other side. Lots of discussions lined up. We speak to Mark Mobius of Mobius Capital Partners. A bit later on, Neelkanth Mishra of Credit Suisse joins in at about 10 a.m. And then N. Jayakumar of Prime Securities to talk about his thoughts on what to do with the current investment scenario. Stay tuned to Bloomberg Live and Indian Open.